Hey everybody, welcome to Forex Trading Analysis. It is 9:56 on April the 17th, and today we're going to be looking at 4 different pairs, but I want to do a quick risk disclaimer before we get started. So foreign exchange trading carries a high level of risk. Before you decide to trade foreign exchange, we encourage you to consider your investment objectives, your risk tolerance, and trading experience. It is possible to lose some or all of your initial investments, so don't invest money you can't afford to lose. Seek advice from an independent financial or tax advisor, and all information provided is for educational purposes only and should not be construed as trading advice or counsel. So today we had Canadian interest rate decisions. Ding, 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 ding. Big moves for the Canadian dollar today. We had a move down of about, this overall is about 142 pips, so a huge move down from the Canadian dollar. I do know what the interest rate decision was, but I don't really care, to be honest. I like to trade big moves, and I could really care less which direction that they're in. So for now, I'll be looking at price action in these videos, and currently we are in oversold territory, so a lot of people are going to be looking short. And as everybody knows, the majority of the market is almost always wrong. So the people who are short right now, the bias to the upside is going to be confirmed if we do continue to remain in oversold territory from the RSI on the 1 hour charts, and definitely if we get there for the daily charts. So currently RSI is at around, I think it should be like 27.30, and it did go all the way down to 18 or 16, sorry, earlier in the day. So this is a strongly oversold condition for this pair, and a lot of times you have these moves down where everybody thinks, oh, after the interest rate, everybody's selling the dollar, and buying the Canadian dollar, so go out and sell everything. But really, when a lot of these moves happen, a lot of buying is taking place by larger investors because the price becomes a lot cheaper. So a lot of times after big moves like this, you will start to see pushes back to median prices around retracement around the 50, and that works for daily and hourly charts. So there's a couple things I like to look for. I'm not going to draw Fibonacci yet, just because I don't think that the move to the downside has quite been completed. I think after a little consolidation phase, we could have another push to the downside from the Canadian dollar. But overall, I am bullish dollar. I've talked about in a couple other videos why, if you want to go back and look at those. I am bullish dollar, and I'll remain that way. So long Canadian dollar is going to be a trade that I like to put in. But like I said, I do think that with strong moves like this, usually the first move is not all that there is. And people who are just hearing about the news or coming in tomorrow in the U.S. session will start to short this pair again, I think. So no trades yet for the Canadian dollar, but definitely a pair that I'll be watching over the next couple days. And the next pair I want to take a look at is the Euro Yen, which is an interesting pair for me based on the fact that we are in overbought territory right now. My bias for the euro is down and my bias for the yen is up, so that's a good indication of selling for the euro yen pair. And a couple things that I like off of just immediately glancing at this chart is, first of all, divergence in the overbought territory. Divergences in the overbought and oversold territory are the strongest indication to me of momentum switching. So as you can see here, we have a higher high in the RSI and a lower high in the price, which is a continuation pattern and does hint to further selling to the downside. So possible levels to the downside are, first of all, close this bar here at 105.332, and the close of these two bars as well at 104.963 and 104.835. So those are levels that I don't necessarily like to get in and out of trades at levels, but I do like to target levels because, I mean, think about how many times you have put a level on your chart and the price gets to that level, well, why not trade before it gets to the level so you basically gain all the profit up until that level? That's what the big banks are doing, and that's what you should be doing too, because the probability is a lot higher of getting to the level than a 50-50 probability that you have set at that level. So that's one thing that I do like to do for pairs. So that is why I like to trade a lot of overbought and oversold, because it doesn't have to do as much with exact pricing as does as much to do allocation of resources, which is something that is very important to a lot of investors. So right now I do think allocation is a little bit too much to the upside, and my bias to the downside for this pair will remain. So it's one pair that I'll definitely be looking to trade this week. I've said in other videos I don't usually like to trade crosses that much just because they don't respect technical levels. So I'm not going to say, oh, it's bouncing off of the 100 and 200. Like, this is probably coincidence. And so I don't know. It's tough to trade the crosses with technical levels, but overbought and oversold do still hold for these kind of pairs. So those are a couple things I'll be looking at for the euro and yen, and I do want to take a look at the charts just to make sure that, again, my bias is confirmed. So for the yen, I said in a couple other videos we were bouncing off the 50 retracement, and that is an area of support for me. Looks like we are just above the 38.2 right now, which is a good sign that further buying is in effect for the yen. We do have overbought conditions right now on the chart for the yen, which again signifies people selling the U.S. dollar yen. It's kind of confusing with the pairs, so excuse me. But so yes, we are above the 38.2 right now. The hourly bars just did close above this. This is the Fibonacci for the daily right here, around 81.07. And so if we do start to see a close below that, my bias to the downside for the euro yen as well as the US dollar yen will remain to the downside. If we do start to push back above levels like this one, it's kind of far away right now, but 81.812, then definitely my bias may be reversed. I think that the 23.6, the backside of it, could act as a possible resistance. But other than that, I will be looking to the downside for this pair, and that's a pretty high probability trade because, as you know, the yen is stuck in a pretty long-term downtrend. And again, looking at the euro, we are in a consolidation phase, so if we do start to push lower, then that is definitely a possibility. Again, divergence this time to the downside for the yen, higher high in price here and lower high in RSI. So that hints to selling, and these two pairs are going to be interesting to trade this week, which is why I'm going to trade the crosses. So those are a couple things I'll be looking for out of these four pairs. And if you want to follow us at SynergyFX for more updates during the week, feel free. And thank you very much for watching. Good luck trading.